Hello. Today is Saturday, September 14th, 2024, and I am Jason Shapiro with Crowded Market Report. And this week we have the Fed meeting that we've all been waiting for basically all year because we're going to get our first rate cut. And people are so focused on is it going to be 25? Is it going to be 50? And if we really just back up a second, I will say that it really doesn't matter, right? I mean, ultimately, they're going to do something, and how much they do now and how much they do later and all this, it all makes for great conversation. It gets everybody all exciting, and it gives you something to talk about, and it's macro stuff, and it gives the people on TV something that you can turn into, and we want to make the bets. But let's just look at how the market's done the last couple months. So in August, we kind of sold off. And early August. And suddenly we had people saying, oh, well, there's got to be an emergency rate cut to save that. Okay. And of course there wasn't. And the market rebounded anyway. And then we started to sell off again, earlier this month. And on that sell off, it was like, well, if they were going to do 25 basis points, that wasn't going to be enough. But if they were going to do 50 basis points, then that was the Fed signaling that there was, some kind of weakness in the economy. So that was bad too. That was 2 weeks ago. And then last week, what we have? Well, we have some numbers that were a little bit stronger than expectations, which indicated the Fed is going to go 25 instead of 50. And the market went up on that. And then later in the week, the interest rate market started to discount in the fact a higher probability that there was going to be 50. And the market went up on that too. So what I'm trying to say is it really doesn't matter. And spending all the time trying to figure this out, first of all, you're never going to know what they're going to do. And second of all, it doesn't really matter. It's just a bunch of bull crap. Okay. Was the inflation thing even a Fed thing to begin with? We know what happened, right? There was COVID, which blocked up production and distribution. And when that happened, prices for things went up. And then COVID sort of solved itself. And when that happened, prices with things came back down. And inflation is running at pretty much where it has been running at pre-COVID for many, many years. And that's where we're at. So we can argue now that, interest rates are a little high relative to where inflation is right now. And so they should cut some. Okay, that's fine. But whether it's 25 or 50, who really cares? And we don't trade that anyway. What we're trading is the markets. How are the markets going to do? And as I always say, that's really what you want to be paying attention to. How is the market going to react to this? And in my view, a 25 cut isn't going to tell us a damn thing. Look, we know the story that the bears are telling, which is that on the first cut, markets traditionally go down. I think that that's a bunch of crap. I think if you really look at the data, it's inconclusive. Are there times when markets have gone down after the first rate cut? Yes. Are there times when markets have gone up after the first rate cut and gone up for a while after that? Yes. Okay. What I do know is there's plenty of liquidity out there, and they're providing more liquidity one way or the other, whether it's 25 or 50. So with liquidity, the chances of the markets really having a big fall are pretty small. And we see that liquidity thing and the idea of more liquidity coming in the gold market, which is making new highs, right? Gold to me is the ultimate liquidity trade because there's not a lot of utility in gold. It's strictly a liquidity thing. So there's clearly no shortage of liquidity out there, which, by the way, is why CPI and PPI are not falling as much as people expect because there's plenty of liquidity out there, right? Inflation is and always will be a monetary phenomenon, according to Milton Friedman. And so that's kind of how I see that. Forget about this 25-50. Look more into how the market reacts to it. I don't think 25 is going to give us any kind of signal because that's baked in. Everybody knows 25 is coming. Now, if 50 comes, then let's see what happens, right? There might be a signal there on certain things. I don't see anything in stock, but if gold can't rally on a 50 basis point cut, I think that's a problem. If the dollar doesn't continue to go down, which has become a pretty popular trade here, on a 50 point cut, I think that's something to look at, right? But otherwise, it's just a bunch of randomness, and people are building this whole story around it and making it sound like it's super exciting. But, as soon as this is done, whether they do 25 or 50, we're just on to the next meeting. We're just going to start all over again. Oh, is the next meeting going to be 25 or 50 or blah, 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 blah. Ignore it is what I'm trying to say. Pay attention to what matters, which is the market's reaction to these things, and trade the tape. Forget about trying to forecast the Fed, and you have to forecast the Fed and how the market's going to react to that. And you don't know either one, but you can let the Fed happen and observe the reaction and try to trade off of that. All right. So that's my thought on the big Fed meeting this week. I wish everybody luck with that. We'll be doing some daily videos to follow up on this. Please like this video if in fact you liked it. Check us out, crowdedmarketreport.com. Check us out on Twitter. Check us out on Substack, where we have some free stuff. And I wish everybody good luck this week. Thanks.